Well, big news today. We find out that 15 of 19 banks have passed the stress test, and many of those banks are going to both increase their dividends as well as buy back stocks. So let's bring in a man who can help us make sense of it. He is Gerard Cassidy, analyst at RBC Capital Markets. He joins us on the phone. Gerard, a lot of institutional investors pay you a lot of money to figure out what's happening at the banks. How does today's announcements or series of announcements jive with your own analysis?
Yes, we were expecting that actually all the banks were going to pass this test, and not all of them would be permitted to raise their dividends and increase their stock buybacks. And as you reported, 15 were permitted to do that. So overall, I think this is a positive result for the banks. Even the banks that did not raise their dividend or increase their buyback, we don't know the full story yet on why that happened or whether they're able to go back and amend their plan. But the bottom line is this. The U.S. banking system was put through a very onerous stress test, and it came out, in our opinion, very strongly. So even in a real crisis, should we hit one, our banks would not be forced to raise capital in that kind of environment, unlike what we saw in 08 and 09.
But, Gerard, for those that did not pass, the CITIGROUPs and the SUNTRUST, I mean, let's take CITIGROUP, for example. What do they have to do differently after failing this test?
I think what we're going to need to find out is the loss assumptions that they were using versus what the Federal Reserve required them to use. I think that was probably the biggest difference between the two, and it probably was focused on the consumer loans as well as residential mortgages. That's where the unemployment rate assumption was going to 13%. And I'm assuming that the loss assumptions by those two banks was less than what the Federal Reserve thought was appropriate.
Okay, so then come tomorrow then. I mean, we've seen the pop today, Gerard. How do you expect this is going to play out in the markets and in these stocks then?
I think tomorrow you're going to see a mixed reaction. The banks that all have passed and are raising their dividends and announcing buybacks after the close today, those stocks could maintain those gains, not as much tomorrow as we saw today. But the banks that disappointed, like the SunTrust or as Citi, will probably trade off tomorrow because they didn't get the approval that everybody was hoping for.